Welcome to Trading Lounge and the US indices for the 22nd of February, and starting with the daily chart for the S&P here, and we have been looking at the Christmas run here being an impulse wave, and we've certainly met resistance here, which is what I call a minor trading level 8 here. 8 I look at as being a profit-taking number, and it's just an even number and the bids get hit there. There's a little bit more to it in terms of geometry terms. It's a trading levels thing, which you can see on the Trading Lounge website. So medium level here, minor level here, and a major level here. So yeah, look, we can certainly have a top in play here, and this particular structure that's moving up here, it's sort of the leaning tower of Pisa a little bit, isn't it? It's basically leaning over a little bit. So with that in mind, and also hitting these resistance levels up through here, looks like we'll get some sort of correction here at this level here. So at this stage I've got it as wave 1 here, ABC for wave 2. We do have another count which we'll just have a little look at the moment, which will just bring it down to around the 2650 area, 2700 area, which is this one here. So wave 1 and 2 here, and in a nutshell 1 and 2 here, and all the way up for the third wave here, the fourth wave here, the fifth wave here for the third, and the fourth pulling back to the fourth wave of 1 lesser degree, or the 38.2% retracement level, which is pretty much on the 2650 sort of area here. But let's just see how this goes here. What we'd be looking for is, we'd be looking for a 5-wave sequence down here, right? Okay, so that's what we need to look at. So let's just go back to our original count here. This is the 4-hour chart here, so looking at an impulse wave to the upside here, and yeah, with the top in place close to the 2800 area through here. So on the hourly chart here, picking it up from this wave 4 here, we were looking at wave 1 here, wave 2 here, wave 3 here, wave 4 here, and then 1 and 2 and 3 and 4 in here, and looking up for 5. Wave 5 here is pretty messy, I'd have to say, but it's kind of gotten to our target. One of the other things now is we need to understand the move down here, and we also need to understand the trading levels concept as well. So this is the 2800 area here. So normally when we see a correction at a particular number, we always go 1 degree smaller. So going 1 degree smaller would be group 1. This is a minor level. These are sub levels 10, 20, and 30, 1, 2, and 3. And then below that we have 80, 72, and 65. So this is the range for the market to have its vibration, its correction in. If it finds support on top of 30 here, on top of number 3, then we consider that the market will be moving to the upside and leaving this number. And this would also be the same for the downside as well. So we can see here at the moment that it doesn't have this whole thing here as the resistance here yet, but if it does, then that would be the trade to the short side at that point. So what we can be looking at here is that if the market drops through here and comes back and tests this, or this will be our reference point, and we can look to short here at that point. We could probably look to short here as well, in this space here as well. Let's go in and have a bit more of a look at this here. At first instance, it does look like wave 1 and 2 and 3 and 4 and 5 in here, doesn't it? So if that was going to be the case, we'll double check that in a moment, then we can look at this here being our resistance level. So the 2785 would be, we wouldn't want to see the market any higher than that. So we'd want to be looking to short. I mean, we want to be having a stop there. But I know that the supply level is just in this little guy here, in this little batch here, so we'll just keep that above there for the time, just for the time being anyway. I'll just save that. Let's go in and have a look at this here. So I was looking at all of this here. I better double check that. So this is 100 ticks. I'm just going to go down to 20 ticks. It's going to be a bit complicated here for a moment, but I just need to double check, and you might as well be there with me on that. So let's just, it's still going to be a little bit hard to follow, but I just need to double check. 1 and 2 and 1 and 2 and 3 and A and a B and C for 4, 5. So we've got 1 and 2 to here, then we've got 1 and 2 and 3 and 4, 5. We've got a third wave into this space here, a little bit from there to there. And then we've got this all here as wave 5. So it is quite long. So we could, and then we've got, let me just check, then we've got this here, which is 1, 2, 3, 1 and 2 and 3 and 4 and 5 here. So even at this stage here, let me just, so this can rally back to this space here and drop. That's what it should do. So I'm thinking, let's clean this up here. So I'm thinking that we've got 5 waves to this point as wave 1, and then wave 2 back to here, then wave 1 down, and then an A wave here, B wave here, and a C wave coming back into this space here, and then moving from that point. So we've got a couple of things here that we can look at. 265, that's our lower end of our, what's in name, you know, of our levels. So, and 72 in here. So this is all of group 2 here. So this is what you see playing out here. I mean, they're just fantastic numbers. They're just great to use. Yeah, it can be looked at in different ways. I mean, it can also be looked at as an A wave here, a B wave here, and a C wave here for a correction, and then make a new high here. So that's the point. I mean, because it's got 5 waves here, I can say that we're going to get another 5. Yeah, it still can be, this is the tricky bit, when an A wave here, B wave here, and a C wave here. So look, I just think the short trade should be under this here, out of group 2 area here. Okay, so I'll just stay with that at 2765, so we can short that low here. That's okay. So I was going to have a look at the banks and so on, but and some of the NASDAQ stocks, but they'll be in the same position as well. We don't have a clear, you know, if we looked at this here, then we had a clear 5 waves down, and it looks like a third wave activity here. It doesn't look like a C wave, because a C wave, if a market comes, I can draw on this side of the price, not that side. So an A wave here is normally the sharp one, and then the B wave, and the C wave is normally on a little bit more of an angle. But when we see this C wave come down this sharp here, then it's kind of saying it's a bit of a third wave activity. So when we look at this one here, of course, that's like, you know, that's really fallen out of bed here, isn't it? So that's really the thing there. So yeah, anyway, it's looking good at this particular stage. Let me just clean this up here, and we'll have a look at the NASDAQ here as well. So the tech stocks. Yeah, it's the same thing here. We've got 1, 2, 3, 4, 5, and 1 and sorry, wave. I shouldn't move too quick. So, got 1, 2, 3, 4, 5 for wave 1, wave 2. Strong third wave here, and a longer. The third wave is longer than the first wave, so I like that. The fifth wave here is extending down. So what we're actually seeing here is you know, when the fifth wave is quite long or longer than the fifth wave, it's basically you know, it's really extending out. So we're getting the range is extending. So let's say we've got the first wave here, the third wave is a bit longer here, where normally the third wave is the longest. If the third wave is the longest, then wave 1 and wave 5 will be the same, but wave 5 coming down here is longer again. So we're getting that growth factor to the downside here. And we'll just check this retracement level here because yeah, it's pretty close enough to the 61.8%. Just checking because what that will do for us, this will be the fingerprint of the bigger structures that are moving down in terms of fractal patterns reoccurring. So it's good to understand all of this, what I've just said then, because this will play out later. Now the same thing applies here as well. Because we got 5 here, we know that after correction we're going to get another 5 here. But yeah, that's sort of all we know. And at this stage here, you can see a nice 5 waves down here. So maybe that's the top, but 1, 2, 3, 4, 5, third wave, fourth wave, fifth wave. So here we'll be getting some sort of ABC correction, I would imagine. So if I can just put that here and put that on that one, even though it's dropped below there, I'd still consider that a B wave. So an A wave, a B wave, and a C. It won't come back up to the 61.8% unless this is the A, B, and C, but I just don't see that sort of occurring there. So once again, look, in this case, it's a bit easier because we've got the 7,000 area through here, so we can short at that point. We can expect a bounce off here. So once that becomes the retested resistance, we'll be fine. So just coming back to the hourly chart here. So this is what we were looking at before with this market. So yeah, I mean, it's all a little bit smaller here. So what we could look for here is that market move down to this level, it bounces, it's like a ball, come back down or bounce again here, the drop through, it will come back and recheck, and then if it fails down. So it's really, we want to find that that low there. But you can go in short here. If you're going to go short here, then you'd need the stop out of the way. So we can just borrow this. We don't need that anymore over there. Put that there. Don't need that. We want to be building into the trade at this particular point. So even this is all really pretty messy here, but 1 and 2 and the 3 ABC for 4 here, but maybe I don't know, I can't figure that out. It's just damn messy, you know, and yeah, but we'll see. We want that 7,000 as resistance, gives us our move to the downside. Alrighty, I'm just waffling on and boring you, so I'll leave and chill out and enjoy the weekend. Thanks for tuning in.